Understanding Auditing Equipment Theft and Loss. This is Ken Boyd, owner of St. Louis Test Preparation. Our email is listed here and also a phone number. You'll see our website and our YouTube channel later on in the presentation. As we mentioned before, the best way to learn auditing is to learn from real-life case studies. And this one happens to be called Equipment on the Company Trucks, and it's based on a true story, a plumbing business. Sam owns Sinkhole Plumbing. Sinkhole employs floor plumbers who are dispatched to jobs by Sharon, who's the office manager. She's got the Nextel walkie-talkies sending people different places. Each customized truck includes approximately $30,000 worth of equipment. We've all seen these trucks on the road. Each morning, a plumber signs out a specific truck for use. The driver keeps a log of the mileage and each job completed. That information is agreed to the dispatching activity tracked by the office manager. So that tells us that the plumber showed up where he was supposed to go. This helps the owner account for all jobs and the time worked by each plumber. The company maintains a parking lot that is fenced and well lighted, and what we're getting at there is that they do a good job of maintaining and protecting the trucks when they're on site at the company's location. Equipment on the trucks. All the company trucks must be returned to the parking lot each night. When a plumber returns a truck, he signs in. Typically, each plumber signs out the same truck every day. That allows them to organize the truck's equipment themselves and be more productive. So if there's particular tools that they use every day, they can get them quickly off the truck if they use the same truck every day. Each truck is outfitted with a standard list of equipment. Sharon, our office manager, maintains a list for each truck. If a piece of equipment is damaged, the plumber returns the item to the office manager and a replacement is ordered. Sharon keeps a record of these transactions. Then we have an employee leave. Charlie is a plumber for Sinkhole. He has a lot of experience and used to run his own plumbing company. After several years with Sinkhole, Charlie tells the owner he's leaving to work on his own again. Sam, our owner, hires another plumber as a replacement. So far, no problem. The new plumber signs out the truck last used by Charlie. Over the first few weeks, he tells Sharon about 6 pieces of equipment that are missing. The owner finally performs an inventory count of the standard items that should be on the truck. Let's see if everything's there. And what he finds is that approximately $5,000 of equipment is missing. While Sam suspects that Charlie, the former employee, took the items for his new business, he can't prove it. So now we're stuck with a pretty substantial loss of equipment. How do we handle this? What do we do to prevent it? Well, the first thing is a term called tag and log. Each piece of equipment should be assigned a number that can be permanently imprinted on the item. If it's metal equipment, sometimes that's scratched in or a plate is stamped on the piece of equipment. The owner will need to make a judgment on the dollar value of each item and whether or not it should be tagged, whether or not it's worth spending the time. The office manager should maintain a listing of each item and its tag number. Inventory count. Once a month, the owner should agree all the tagged items on each truck to the equipment listing for that truck. If an item is missing and hasn't been reported so, the owner can follow up with the employee using the truck. Hey, we had a large piece of equipment on the truck. Our inventory count says it's missing. Do you know where it is? Oh yeah, I left that at a client location. They're supposed to be sending it back. The inventory count should be a required procedure before an employee receives their final paycheck and leaves the company. The cost of any missing equipment can be taken from the paycheck if necessary. We're holding the employee responsible for the loss, which relates to the last slide. Every company of any size should have an employee manual. When a plumber is hired, he or she should be told about the inventory count procedure and the policy of withholding the final paycheck until the inventory count is verified. This will discourage employees from attempting to steal equipment. If they know you're watching, they're less likely to do something like theft. That's the end of part 3 of auditing. You'll find part 4 on YouTube. You can subscribe to my channel, Ken Boyd STL. For live tutoring and live chat sessions, you see our website, www.stltest.net, our email, and finally our phone. Thanks for watching. We'll see you next time.